Got a little feeling something might break in this market, and I think it might happen in this quarter. Just a little hunch here. So on the screen we have some issues already. It's only the start of October. Yes, I know, maybe we might go up, we may go down. I'll look at the data in a second, but more pressing matters here. Lots of rumours going around over the weekend that basically Credit Suisse Group are in a bit of difficulty with swaps and credit and defaulting on said monies, right? Big problem. So there's a chance of a 23% default on a lot of the bonds within the next 5 years. Now there's a lot of liquidity in here, and this is where people are starting to get a little bit twitchy. And when you look throughout the internet and do a quick Google, you can see there's a lot of information being spilled out over the last 24 hours. Maybe a little bit of fear kicking in, probably yes. However, we do not want to go down the route of 2008, let's be honest here, and the Lehman Brothers. Now the Lehman Brothers did go kaput, obviously, bad management, but we're talking 4 times the amount of liquidity that they have under management that could rumble the entire financial ecosystem, including crypto, everything, right? So just let's be honest here, we don't want that to happen. Now, when we start looking at all these kind of informations and what's been going out, there's 7 articles here essentially, but the overall punchline is the kind of kaput, let's be fair here. There is a few other things to talk about as well. There's also Deutsche Bank, who are also getting some problems and a bit of heat. Now, when we talk about this, and I mentioned it before in terms of Lehman Brothers, there's a $4.1 billion gap in orders that could be somewhat of a problem here. And when we get low liquidity, this is where panic comes in. This is where margin calls tend to happen as well. The reason for this is banks and big kind of institutions got greedy during this market, and they failed to cover their asses in a potential decline. The decline was coming. High inflation kind of gives you that little bit of a warning, right? And they just carried on going. And you can see here on this chart how the spreads have massively changed, and we're going towards 2008 levels. So we need to be careful, right? Really we do. So be careful with your money. There you go, there's a warning for you. Now let's talk about Bitcoin and the future predictions of what the entire market's doing, right? As I've said, thumbnails and all kinds of stuff like that when you were clicking on this video. Are we going to go up or are we going to go down? Now, historically, October is one of the strongest months for Bitcoin. However, so is April, and April wasn't very good this year. Now, I like to look at this with a fine grain of salt because as much as I like to respect the past, I don't like to act on it because sometimes it doesn't really work. The one big thing that I will say is in the bear market, October is often bad. And you can see that in the data. Usually, you can see here, this was a bearish market for obvious reasons. This was a bearish market for obvious reasons, right? There's always going to be times where you bounce, especially if you had a prior month, which is a bit horrible, let's be fair. When we look at Ethereum as well, similar sort of vibes. Just, start of a quarter, earning seasons in the world of the stock market and the S&P could be a massive factor. But quarterly, you've just got to look at the fact that, yes, Q4 is usually pretty bad when it is a bear market. So bear that, no pun, in mind, okay? So just be careful, right? The reason why I want to talk about it is because we seem to be at one of those bubble areas where something doesn't look right, in my opinion. Weekly time frame, Bitcoin here. Now, this is some old analysis that I've had on my chart for a while, right? I still do believe we are going to go roughly around 14 to 10k. That's kind of the ballpark area that I think, my personal opinion, not financial advice, we could fall if things get a bit bad. Let me explain in more detail in a second. Now, the reason why I say that is because this looks like an obvious bottom now, right? But the thing is, past scars and all that, and I did talk about this in my podcast. If you want to check it out, there's a link below where I talked about my mistakes in the last bull market, bear market transition, right? Back a long time ago. I was convinced we were going to stay at 6k. I was convinced of that. Didn't, did it? It went lower, right? But it's one of those things. But it seems to be playing out in the same sort of narrative where nothing is happening and we're waiting on other things. That other thing is a very big elephant in the room, the S&P 500, for example, here. And when we go back in terms of what I've just talked about, that there could be some banks that go tits up, let's be fair here, we're going to get fear in the market. We're going to get that problem because we are tied to that S&P 500. So as much as an 18k, 19k Bitcoin looks on paper, it doesn't look like a bad investment. But my advice would be, not financial of course, is don't just go full balls deep, because something might happen and you'd rather be prepared for that than not prepared. So plan your orders basically, just dollar cost average in, plan them, put them on the exchanges, ladder them in, because your emotion will probably get better of you. It feels like something's going to happen. We're going to get a directional move at some point, whether that is up or down. I want it to happen to then see clear price action. The whole point of it, right? We want to do it in one direction, and whether that direction is good or bad, it doesn't really matter. Follow it. Now, I talked about it, the elephant in the room, the S&P 500. This is an ugly chart, very, very ugly. Now, a lot of people will say, oh, when it's so bearish, why don't you buy, go against the grain? But we're talking big money here, big financial plays. We're talking about the currency markets as well, the increase in the dollar rate too, in terms of the index there. And this is on in my opinion, this is on a collision course for basically this level here, in my opinion, where historically, this was where the COVID crash happened. Vroom. Will we go down to COVID crash levels? Don't know. Possibly, yes, if things get really bad. If there's a lot of fear in the market, if a lot of people are pulling money out, if companies are then therefore having to do spending cuts, people lose jobs, unemployment rate goes up, and it's a recession, simply, we're going to get this pain for a long time. And I will openly say this, I do think that we could be able to dollar cost average for a very, very long time, for at least maybe a year, maybe more than a year, where we could find Bitcoin or altcoins or even the S&P index funds, whatever, at a much lower rate, where you can hopefully be able to dollar cost average if you've got the funds to do so. That's my overall take on it, because I don't think this is going to turn around anytime soon. There's some people that do say, oh, we're just going to turn around, be fine. But that was my attitude back in 2018. I was that person. I've learned a lot since then. You've got to go through a cycle. And remember, not much of a dig, but a lot of these influencers with big followers weren't around in that period. So that might be their first rodeo, right? Be careful who you listen to, because if you're getting bullish on this right now because it's looking, I don't know, yeah, don't be. Anyways, done. If you enjoyed this video, check out this video I'm just recommending. Probably a good thing to learn if you need it.